Hey there, welcome to saas.unbound podcast. I'm your host, Anna Dana, head of growth at Saas Group, a serial acquirer buying wonderful SaaS businesses to take them to the next level. And here I chat with inspiring founders and experts to get an inside scoop on how they made their business success. And today with me is Blake Hutchison, CEO of Flippa, the biggest marketplace for buying and selling online businesses. Super excited to have you here, Blake.
Thank you very much for having me, Anna. It's a pleasure. I can't wait for the chat.
Awesome. Well, I'm sure we'll have a lot to discuss. I mean, M&A is like the hottest potato this year and last year. I keep forgetting that it's 2024 already. But before we get there, maybe let's have a quick rundown about your background, because I know you've been in travel space before. How did you land in M&A?
Yeah, good question and a good way to kick off an interesting podcast, I guess, about business growth and M&A, obviously. So I've worked in lots of businesses. I think that's probably the best way to start. And there's benefit in that because you get diverse perspective on the way that different business models operate. And so I have spent time in the travel industry, both in a publishing context, that was at Lonely Planet, which was the world's largest travel guidebook publisher at the time, and then in an e-commerce context at a company called Luxury Escapes, which was the fastest growing company in Australia and certainly a powerhouse in the flash travel e-com space. But equally, I've also worked across SaaS businesses in the accounting software space at Xero. I've worked in startups and scale ups and obviously now running Flippa, which is an M&A marketplace for digital assets around the world. And I think it was that diverse understanding of different business models that ultimately made Flippa appealing to me and also probably made me appealing to Flippa. And so I would summarize that as saying that all businesses do share similarities, right? Most of them, particularly in the startup and scale up space, are interested in growth. Most of them are in the pursuit of new customer acquisition and customer retention. Most of them are trying to figure out how to retain or maintain or grow average transaction value. And most of them are related to building a great staff and team base and building, repeatable, predictable processes. So I think that regardless of your background in travel or accounting software or M&A, there are similarities. And ultimately, I'm the CEO of Flippa, and we recruit M&A experts who assist our marketplace to operate and obviously assist business owners and prospective buyers and investors from all over the world. And so my job is obviously to build and help to build the world's biggest marketplace for M&A. And obviously I do help from time to time with respect to participating in the M&A process. And of course, I look after M&A from Flippa's perspective also. But what I love about Flippa is just the dynamic nature of the entrepreneurs that we get to witness on our platform, and then learning about their businesses and how they grew their businesses, and then ultimately helping them to find a pathway to exit. So that was a really long way of saying my pathway comes as a function of diverse experiences.
Okay, yeah, I mean, makes sense and perfect. I think that's really interesting what you said about like learning what people are doing on the platform, how they're selling, who they're selling to, and just using that for future growth. So, what's going in M&A? I mean, 2023 has been so unexpected, unpredictable. A lot of there. So yeah, what has it been for Flippa? Because we've seen it all. I mean, honestly, we've seen people saying it's all back to business. The valuations are growing. You can again get your 40x on your revenue, or everyone's lowballing and it's not happening anymore. It's a COVID hangover. So what have you seen? What is going on Flippa?
Yeah, so before we get into multiples, let's look at the themes a little bit first. So, buyers and specifically company buyers are clearly in the business of buying businesses to drive inorganic growth and get growth out of their businesses where traditional channels have become more expensive. Um, and then those people looking to exit right now, doing so for any number of reasons, and they're probably the same reasons as has existed historically, although in some cases there has been a larger number of venture-backed businesses seeking exits than historically, and that's as a function of a bit of a market crunch. These businesses now need a pathway to exit because there's no longer a natural pathway to capital, um, and or their businesses aren't growing at the speed that they would have expected or have historically experienced. And as a function of that, it's a good time and the right time for them to pursue liquidity, and therefore they seek out these pathways to exit. So I think the thematics are related to how buyers consider growing their businesses and why sellers need to now exit. So one is a want and one is a need, and that represents the two sides of the marketplace. As it relates to multiples, I think the arena that Flippa operates in, you haven't seen historical valuation inflation. So valuations have remained steady. And they've remained steady because it was never an overvalued asset class to begin with. So Flippa is dealing in, for the most part, sub $10 million revenue businesses. And clearly far more sub $1 million businesses than those 1 to 10 mil. And this as an asset class is becoming more appreciated, but it's still underappreciated. The assets were never overvalued to begin with. So we actually haven't seen a great deal of multiple contraction, whereas that's very different to the traditional scale up, scale fast, blitz scaling mentality and methodology that has been used by VCs, to some extent private equity, and then public market tech stock trading, where you're obviously got liquidity in the marketplace, so therefore you get some valuation inflation. You've also got a huge number of businesses being invested in on the basis of speculative opportunity long term, and a maturation of the digital economy. So, long story short, our multiples are quite similar year on year and across each of the asset types: SaaS, ecom, content, and apps, iOS and Android apps for the most part. It's a blended 3.5 times multiple, and that's a
Okay.
multiple. That's a multiple of net profit, and that's actually relatively flat.
Interesting. Okay. All right. So it was a fuss over nothing. Okay. So what about 2024? Because, like, again, um, a lot of talks about, like, hey, maybe 2023 has been a bit early for the whole, like I said, COVID hangover kind of situation, because somebody raised in 2020, 2021. Now they haven't reached their growth or product market fit, or they see there's no more investment coming because investors are again like stalling the deals. So what do you think 2024 is going to bring? Is it going to be like an influx of deals when all those companies are going to liquidate, or like try to find a buyer that would have the resources to take them to the next level? Or like, what's your opinion on that?
Yeah, well, VCs all over the world will double down on the stars in their portfolio, and they'll exit the dogs in their portfolio. And so the dogs have to find a pathway. It's either shut down or exit through a trade sale. And so, as a function of that, a smart founder right now will be setting their business up to either raise capital, obviously where possible, and in the event that they can't raise capital, they will cut costs substantially to extend their runway. And then, of course, there's a third scenario: get your business in a strong financial and operational working order and set it up for sale. And we will see more of those than ever before in history in 2024. So that's a good news opportunity for buyers out there, but it's a potentially less favorable outcome than a lot of founders had anticipated. But let's face it, the failure rates of businesses have not changed that much. And the failure rates of startups have not changed that much. It may have been that the runway you were afforded through multiple raises and multiple capital raisings extended the runway of a company in some cases where it wasn't necessarily deservedly given, but the numbers are approximately the same. I think the difference is now there is a better education among business owners of the opportunity to exit. And so we should see more of them actually exit than shut down. But founders need to be conscious of what that means for them, because there's going to be less money on the table, particularly where they've gone through a Series A, Series B, or, in some cases, Series C, and there's multiple shareholders on the cap table have preferred options or preferred stock. Those founders are going to face a really, really hairy time out there. So our message to founders who are VC backed, particularly those who are seed and Series A, is start cutting costs, prepare a business for exit, and make it as appealing for a potential buyer as possible. And there'll be lots of them.
Okay. All right. That's exciting for us, obviously, right? But you mentioned education, right, about exits, and that's kind of what we also noticed, that it's not enough of that out there. Like sometimes founders are not really sharing the process that they went through. Buyers obviously want to withhold some information. But I think you're building a university or some kind of educational program to fight that. Can you talk a bit more about that?
Yeah, so first and foremost, I think it's unfortunate that journalists all over the world have chosen to talk about billion-dollar exits and unicorn exits and not ever given light of day to those business owners who have sold for 5, 10, 50, 75 million, where the stories are more real, palatable, and understandable to the average digital asset owner or technology founder. And so if we can get more stories out about those experiences, I think the whole ecosystem will be better prepared. So there's a couple of things that Flippa does today that I would encourage people to seek out. Sounds like an opportunity to brag about Flippa or sell Flippa, but we have the Exit podcast, and that is only stories of people who have bought and sold sub $100 million businesses. And so you can learn a lot through that. You can learn a lot about the way a business owner prepares their business for exit. You can learn a lot about valuations, and you can learn a lot about the negotiation, which is often the most important piece. And the negotiation is very much about putting the emotions aside of selling your business and thinking practically and in a pragmatic sense about what a buyer is actually looking to understand and ascertain about your business, how it operates, and whether it's going to be a good fit for them or their portfolio of businesses. So if we can get people to understand that you're actually needing to put yourself in the buyer's shoes and less so your own shoes for the purposes of an efficient negotiation, I think we'll be well versed. And so the Exit podcast helps people to understand that perspective. The second thing that we do here at Flippa is give people a lot of data and valuation insight. And so what I encourage people to do is go and find an asset which you deem to be similar to yours on our platform and look at the benchmarks and comparison data. Because every business listed on Flippa is actually matched to a snapshot of their industry. And so from that, you can get a sense of pricing. You can also get a sense of performance. So what average order values are for e-commerce businesses, what the average MRR or churn rate is for a SaaS business. And you can actually benchmark yourself. And so once you understand the benchmarks, you get a sense of how to price your business. And of course, most business owners think their business is worth far more than it really is. What they actually need to understand is that there are clear benchmarks around how buyers think about these businesses. And it's not as simple as saying SaaS businesses trade at a multiple of X. They are diverse and different. There's B2C SaaS, B2B SaaS, there's enterprise SaaS, small business SaaS, different industries, and people need to understand those benchmarks. So what we're about to do is to start to produce a bunch more content, call it database journalism, around how these businesses trade, and the insights into those businesses. And we think that business owners are better when they understand the metrics that a buyer is actually looking to ascertain and understand versus what they think is important to understand. And most people who run these businesses don't actually understand the intricacies of what a buyer is actually looking to assess.
Yeah, all right, that makes sense. And when you said that, it's easy to, go to Flippa and see similar businesses and see the benchmarks and like do your homework basically about the assessment. And I mean, uh, it's still difficult, right? Because you kind of get all the information out there, and it seems like you're kind of in the same pool, right? But you're different. But I also have heard, and correct me if I'm wrong, that you are leveraging a bit more of AI tools to do a bit better tailoring, better matching between the sellers and the buyers, even if it means that the deal is going to go on for a bit longer. But what you want to do is basically find that match culturally and price wise and whatnot. So yeah, how are you doing it, and why did you decide that this is going to be something that you want to pursue?
Yeah, so I'm certainly no expert in AI, but we have people on our team who obviously are. And so logically, what we want to do is provide a really efficient pathway to meeting the right buyer for your business. And on the flip side, we want to provide buyers a really efficient pathway to accessing deal flow. And so, in very simple terms, we're looking to understand clusters of customers, and then from those clusters, um, assert and assume a relationship. And so, what that actually ends up being is two graph neural networks, one that sits on the buy side and one that sits on the sell side. And so the graph neural network represents the clusters of those customers on each side of the marketplace, and the proximity of each of those buyers to each other, or business owners, businesses, assets to each other, informs a relationship. And so then if Anna is looking at multiple businesses that you clearly like as a function of your intent, we can then infer that I would like similar businesses. This is, of course, programmatic in nature. And then we can then recommend programmatically, based on those graph neural networks, the assets which we think are going to be the best fit for you as a buyer. Incredibly, it's turned out to be very, very accurate, and getting smarter by the day. And so we are running around 400,000 matches a week. And so that obviously takes into consideration all of the assets that are on the platform at any given time, as well as our private pool of assets. It also takes into consideration all of the buyers. And so we've got millions of buyers, and we're adding around 20,000 new buyers a month. And so as a function of that, we can run very, very quickly the matching experience for our customers and get them in front of deal flow fast. The flip side of that is that a seller gets to meet more buyers more efficiently. And so what we're trying to do is two things. We're obviously trying to find you the right buyer. We're also trying to get deals done quicker. And so we've seen deals done within weeks as a function of finding the buyer, because that's the challenging piece here. Now, of course, that's not to say deals don't go through due diligence and all of the usual hard work of brokering in a deal, and the usual M&A process doesn't have to play out. Of course it does. But rather than rely on a Rolodex or a CRM or some other mechanism to find the right buyer, that piece of the process that brokers and or M&A advisors are used to going through is almost redundant. Now, there's so many other parts of the process which are critically important, but the AI has driven deal speeds they're now quicker. And that's been really, really helpful. And in fact, when you demo that to a seller, when you show them how many relevant buyers are interested in their asset, that's actually a critical piece of fodder, if you will, that a business owner is interested in understanding.
Yeah, of course. I mean, it seems like every platform out there wants to eliminate the broker from the equation, but at the same time, that's like my next question is about Flippa being moving to a bit more of a like managed network, managed platform, right?
Yeah.
So you're doing this two things basically to first find the sellers faster, but then having somebody basically handhold the founders through the process to, well, you tell me to do what, right? Because like it on from my perspective, it makes sense obviously, and we've talked to founders that sold to us with a broker, without a broker, through a marketplace, and all of them would say, yeah, of course it makes sense to like have somebody professional go through the process because I want to focus on my company and my product, and I don't have months to to do my due diligence and to to have all those calls. So what are you doing with pairing these two um, seemingly kind of different things together, right? So what are you bringing to the founders with that?
Yeah, so I'd say it's synergy. The platform has to work in the interests of the business owner and the buyer as much as the advisor and broker does. And they have to complement each other. And so let's talk about what the platform does versus what the broker does. And to be clear, Flippa has brokers on staff, and we're here to represent businesses valued up to $50 million, and we do that really well today. And so the platform's extraordinarily good at aspects of the traditional brokerage process that technology is likely to be better at. And so we connect to 15 different data integrations. So we connect to QuickBooks Online, Xero, Stripe, PayPal, Shopify, BigCommerce, Amazon, Lazada, Shopee, etc. And as a function of that, we can pull down data straight from the platform. We can rationalize that data. We can compare it to the peer set, provide benchmarks and comparison. And that's all stuff that happens programmatically, that is super efficient and puts in the hands of the seller the information that they can sign off on and present, and puts in the hands of the buyer the information that they need to make an assessment as to whether the business is a good fit for their mandate. That happening programmatically cuts down on the process of getting your business ready for sale. And I don't mean fit for sale, I mean ready for sale. So fit for sale has to happen far before you think about the exit process, but ready for sale. The next thing that the platform's going to do is, as we just alluded to, it's going to match, and it's going to match at speed, very, very efficiently, at scale. And again, that's something that's been part of a traditional brokerage process. And now you have the support of technology helping you through. Okay, so now they're the two major things that the platform is going to assist with at that juncture of the deal flow or the deal life cycle. Now the broker's going to come in, and the broker's going to communicate with the best and most relevant buyers and ensure that they understand the business that they're dealing with, validate their buying mandate, validate their funds and their capability to get a deal done, and ultimately negotiate on behalf of the seller as to what deal is likely to get done and the types of deal structures. So is it going to be seller financed? Is it bank financed? Is there an earnout or stability payment? Is the asking price actually negotiable? Or is it a hard and fast rule? Are there any operational details about the business that the broker knows inside and out that they can pass on to the buyer and give the buyer the assurance that this is the deal that is right for them? So that broker is still critical in the process. They also educate the seller as to the expectations of what buyers actually look for, and setting those expectations and we might call it the psychology of a deal is really, really critical. Now, once all of that has happened and you've found your preferred buyer, the platform kicks in again. We have embedded and integrated letters of intent. We have embedded and integrated asset purchase and share purchase agreements, which you can use Dropbox Sign to execute. And we have integrated escrow, trust account payments, crypto related payment services. And so the platform then will come to the fore again. So it really is a meeting of minds, the platform and the advisor, in a managed marketplace context to ensure that the processes that technology can to govern are governed, and the processes that are best left to a broker are brokered. And so as a function of that, it's a managed marketplace which is really efficient.
Yeah, that makes sense. Okay, thank you. All right, so let's get to B2B SaaS, right? So what are the numbers, right? How many, if you have the numbers off the top of your head, how many B2B SaaS businesses are being sold, or maybe let's take 2023 were sold on Flippa, and again, if you have any data on that, what is the biggest reason for founders to sell if you talk to the founders after the sale?
Yeah, it would only be a handful of B2B SaaS businesses that were sold on Flipper in 2023. So I wouldn't say it's a large number, but regardless, I think that across the board, be it B2B SaaS or SaaS in general, or any other business model that can operate on Flipper, and just by the way, Flipper only does digital. The motivations for the seller are typically the same. The motivations for the buyer are typically the same, and ultimately the things that factor in as to whether you get a deal done come down to financial and operational maturity. And so, what founders will need to understand is that if their business is mature, typically 3 years of age or older, and flat or growing, declining is a slightly different story. And with good unit economics, there is absolutely a buyer for you. In fact, many. And what I would say right now for B2B SaaS founders, if you are a B2B SaaS founder and you were to use the Flipper marketplace, you would find a very large pool of buyers gunning for your business, including probably your company, Anna. So there's an ecosystem of buyers waiting to be buying these SaaS businesses, and we need to tell more people about that.
Right, absolutely. That said, a lot of serial acquirers like saas.group, or other B2B SaaS buyers, strategic buyers as well, um, try to steer clear, or at least try to have some kind of relationship with the seller before they acquire them. uh, Let it be on the marketplace even, right? But yeah, the relationships and kind of like having to get to know each other, because you're getting into a long-term relationship. It could be a remote relationship, but still you're in for a long haul. So for many buyers, it's critical to get to know the founders or the founding team. Um, so how are you fighting that with Flippa, if there's any
I
way?
think there's probably a few things. One, your point is extraordinarily valid and so similar to exiting is quite similar to raising capital. Um, Relationships matter, and the number of buyers that you can actually speak to and position and understand their frame of mind or their point of view is really critical to ultimately getting a deal done. So it's unlikely that the first buyer or multiple buyers that you meet are ultimately going to be the buyers that you do a deal with. And so those relationships are critical. The second point there is that the average business actually takes 6 months to sell, right? And I'm talking about businesses which are greater than $1 million in revenue. And so as a function of that process actually does happen on Flippa as well as in the real world. And in we're consistently updating the financial data as a function of being connected to these integrations. We're consistently communicating those updates back to the buying cohort. And as a function of that, over time, typically, 3 months up to 6 months in length, these buyers are getting to know these founders, these business owners, as well as how the business operates. And they're doing that through the usual means, Zoom calls, sometimes meeting in person, but they're also doing that for the purposes of seeing how the business will perform under the pressure of an exit process. And so one of the things that we always talk to business owners about is just because you're going through the exit process now is not a reason to stop running your business. It's weird when people are raising venture capital, they're foot to the ground, foot to the throttle, thinking about how they can consistently drive growth in the business to impress these VCs. Selling your business is absolutely no different. The business has to consistently perform over the sales process to ensure that a deal gets done. So I don't think that the relationship side is that different, but I think in 2024, where there is going to be lots of competitive pressure among buyers to be getting the right assets, let's assume the price is right. Well, there should be some competitive tension, and in theory, deals should get done a little quicker as a function of how many deals there will be done, how many deals you will be able to do, and the number of buyers in the same mix for those deals.
Okay, yeah, that makes sense. All right. Well, so how to, we've established what buyers should do to maybe streamline the process a little bit. But what could sellers do? Because the marketplace is huge, right? There's so many sellers out there, and you're predicting an influx in 2024. So it's going to be even more competitive. So how to stand out on a marketplace like Flippa? Is there any way? And do you see any trend, of businesses that are being bought? Because, like, for example, for us, we see a lot more customers because we're in B2B space that are AI or that have added AI, and it's shining bright like our LED lights behind us. We're AI, and everyone's like, "Woohoo! Yes, that's what I want to get into." So. Is it the same in Flippa? It doesn't matter if you have AI in your headline. Do you get more buyers' intent to buy that business, or is there any other way to stand out and like really streamline the process?
Okay, so let's talk about stand out, how you stand out, and then let's talk about the impact of AI and standing out. So the best businesses stand out. And so there's lots of less good businesses, lots of crummy businesses in the world. But the businesses that make it on a marketplace, that get through validation, verification, ultimately have connected data sets, and ultimately are appealing to buyers, are those businesses that operationally and financially have very predictable financials, strong standard operating procedures, and the underlying gross margins are strong, good quality unit economics in areas which, frankly, we would describe as boring. That's because they're predictable industries that will always be here, that they are now servicing and servicing well, presumably. So those businesses stand out exceptionally well. And so businesses that serve small business owners, businesses that service traditional industries, service industries like cleaning, service industries like tradespeople, those types of B2B SaaS or SaaS businesses tend to stand out very quickly because buyers understand that they're less speculative in nature and they're more predictable. And so those businesses do naturally stand out. Clearly, there are ways and means from a marketing standpoint that you can make a business stand out and be more appealing. Number one, price it well. So pricing is a strategy. And instead of thinking that the right thing to do is to price extraordinarily high and scare buyers away, which is pretty natural. We encourage people to use the benchmarks and then price near the top of the benchmarks, but then be willing to work back from there. You can also produce materials that show people how the business operates. And what we'll always do for the best businesses is produce a seller interview where you can get behind the scenes of a good quality business and understand how it works and operates. And I think those things help business owners stand out. So it's about telling the story, no different to capital raising, actually. So now let's talk quickly about AI and the impact of AI. Interestingly enough, Flippa doesn't really do speculative. Flippa more does boring. And so most buyers who are interested in speculative investments aren't currently buying for today, they're investing for tomorrow. And most people on Flippa are interested in inorganic growth today and building out their business growth stories today. And so, as a function of that, AI hasn't really gotten a big foothold yet in a Flippa marketplace context. It obviously is a shiny bright light flavor of the month as it relates to venture capital. And it obviously is very compelling in the context of our own use case, where we've coupled it with the core platform and made the core platform more efficient. But as it relates to someone who is actively looking to buy right now, they're looking to buy something which has historically operated well. And if it's historically operated well, it's less likely that AI has an impact on that business yet.
Okay. All right. Yeah, I would think that there was maybe, at least in B2B SaaS, at least in our little bubble, some kind of influx in buying those businesses, just because they made such a fuss over the year. We've seen the stories. We made, I don't know, $6 million in 4 months, right? We got to product market fit in 2 weeks, and blah blah blah. So I mean, I would expect people get really really excited about it, but maybe, like you said, it's a bit more speculative than we
Yeah,
want.
so I think the difference is, like, let's say you're a seed stage investor and you've got a business which is rocket ship growth trajectory, has been around for 6 months, has scaled from nothing to something very big in a very short period of time. You're talking about seed stage investing, right? Where you're buying into a founder's story, you're buying into the short term traction, and you're hoping for very long term gain. That's very different to a traditional M&A process that we see on Flippa, where you're actually looking to buy a sustainable, good quality, cash flow positive, or revenue generating, predictably performing online business. And so it's just two different segments of the investing circle. And there are certainly crossover events. And so from time to time, we will see those assets list. And there will certainly be a lot of intrigue and a lot of interest. But as a use case, the average business that sells on Flippa is 4.5 years old. And so, what we would encourage business owners to do is talk about AI as an opportunity. What are the areas of your business today where you believe you can get operational efficiency through the use of either proprietary AI, build your own machine learning models or algorithms, or embed something that exists today. And we would encourage people to think about those as opportunities and even think about integrating those within the exit process so that you can actually share any traction. But ultimately, the business is still going to get bought on its financial and operational performance, which is likely to be trailing 12 months, trailing 24 months. And that's the way we see the average buyer assess a business.
Absolutely. Okay. All right. So just a couple more questions. And first, because I started learning a bit more about you, and I don't know if it's okay to announce it already. We will partner with Flippa for one of our events with saas.group, and you guys are pretty big with this stuff, like building a community. As far as I remember, there are almost 2 million people in Flippa community, whatever that means. And like, please tell me more about this. But why is this, a growth trajectory that you've chosen? Why do you think people that sell their business need a community? And what are you doing apart from all the educational materials that you give to people and the events that you sponsor, that you organize, to build it and grow it?
I think there's a couple of points here. So, one, absolutely, we believe in community. Two, we believe in community because the entrepreneurs that operate around the world across different categories and different business models are actually all in it together. They're building the new small business economy. It just happens to be that the new small business economy is digital in nature. It's still relatively new. Then throw in the concept of exiting, which 99.9% of people have never had experience with, and you need to have a shared language. And so the Flipper meetups and events that we do with SaaS Group and others relate to building a knowledge base and relate to having shared wisdom about this, what Flipper calls the M&A for everyone concept, or vision. So we want people to go into these experiences eyes wide open. We want buyers to be able to share their stories of how a deal gets done. And we want sellers to be able to share their stories of how exciting it is to go through that process, but also how time consuming it can be. And let's then better inform everyone and therefore ensure more deals get done. What we've found is that customers love, and our community loves, um, being a part of our community. And there's actually lots of communities that talk about growing, starting and growing, and there's very few communities that talk about exiting. And so we own that space, and we're determined to provide a forum which is, safe and fun, and but also extraordinarily educational.
Great. Well, I hope we'll find more ways to collaborate with you guys, because that's something that we want to do, because I agree with you 100%. Exiting is so confusing, and it seems like there are three ways you can go: a broker, find your own um, new home for the company, and go with the marketplace. But within those three options, yeah, you can still learn so much, and you have to in that case. So yeah, I think it's great what you're doing. So a couple more questions, the usual ones on the podcast. The first one is, of course, what has been so far the biggest win and the biggest failure over your 5 years with Flippa?
Yeah, I think the biggest win for us is clearly the influence of. It's funny because I just talked about how buyers aren't necessarily interested in it just yet on the Flipper platform, but how powerful the AI recommender slash matching engine has been for us. The speed at which we can bring buyers into a deal, what we call the deal room, has certainly been unparalleled in the industry, and has certainly been a mover for the Flipper business, but certainly a big help to both buyers and sellers in getting deals done too. So that's the biggest success for sure. I'd say the biggest failure, and it's a really interesting one, we heard from a lot of buyers that they wanted assistance post acquisition in finding service providers. So SEO, design, web development, sales, marketing in general, admin, those types of things. And so we built a service marketplace on top of Flipper. And so we do 12 to 15,000 transactions a year. And the whole story around that was post acquisition, here is a curated collection of the best service providers in the world to provide 5 to 10 different um, core growth initiatives or activities. It didn't work. Um, a buyer would buy, be it as a institutional investor acquiring for a portfolio, or as a high net worth or individual buying for a side hustle or acquisition entrepreneurship opportunity. They bought, they ran, but they didn't use our service marketplace. So that would be the biggest failure. And that was, I think, now maybe 2.5 to 3 years ago.
Interesting. All right, because that's something, that is a bit how we operate at SaaS Group, right? When we buy the companies, the brands, they stay independent, right? But at the same time, when they need resources, when they need additional people, we have the central team to, make the influx of a person that would help, with SEO and marketing. And I think the platform, in this case, would make a lot of sense, um yeah, maybe it's just an acquired new thing to get used to.
I think that in the Flippa context, it's quite interesting. So, we're acquiring slash registering 300,000 plus new buyers per year. But if you put that into context, there's only 12,000 odd transactions happening. And in many cases, they're repeat transactions. So the buyers who ultimately, there's a lot of people interested in moving into M&A slash acquisition entrepreneurship. But the buyers who actively pursue it and go through with it are actually quite experienced in nature. And so what we find is sellers are inexperienced and buyers are experienced. Yet our product assumed you were inexperienced. And as a function of that, those buyers who probably know how to operate or have teams of operators at their disposal weren't interested in those services. So we got back to business and just kept on building out the marketplace for M&A. But you got to go through these mistakes to learn.
Right, it's a learning experience, absolutely. All right, so the last question is about hack, right? And well, we're talking about M&A, we're talking about Flippa. So what would be your best hack to sell fast in 2024? Because obviously no one wants to drag the deal for the next 18 months, at a relevant, rational valuation. Again, maybe your advice on how to get to the rational valuation as a founder. But yeah, what would be your hack to streamline the process and to get what you want, basically the dream exit that every founder deserves?
Yeah, it's a great question. I mean, the best hack I can think of on the fly has got to relate to pricing. And so I would encourage people to be able to work backwards from what is the ideal price to an agreeable price. Price at the ideal and continue to discount until you get to your agreed price, and use it as a tactic to drive buyer interest over the course of a campaign period. So let's say you want a $5 million, let's say $5 million enterprise value. Why don't we price at $7.5 million? Think about a 6 to 8 week selling period, and then discount over that period of time. So as buyers can see that, one, you're reasonable, two, you're willing to negotiate, but three, you still end up with the price you want.
Okay, that's a good one. All right, interesting. Thank you for sharing that. I think it will be valuable to at least think about for a lot of founders. So thank you, Blake, so much for this conversation. I think what you've shared has been great, and like I said, really excited about the way we can work with Flippa a bit more with SaaS Group, and yeah, happy to see what you're up to in 2024.
Thank you so much, Anna. Yeah, and absolutely pumped to be partnering with SaaS Group. Can't wait for our events. Thanks very much.
Thank you, and take care.